that means we are now live on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we break down all the news, the action, the information in the markets, in commodity stocks, anything that's grabbing our attention, and try to have some fun while we're doing it. Got a very, very jam-packed show, lots of stuff going on in the news, lots of stuff going on in the markets that we got to break down and dissect one thing at a time. Earnings Roundup, Microsoft, Tesla, they kind of lead the way in terms of the top two, but then there's probably another dozen of important companies, interesting companies that did report earnings either last night after the bell or today before the market open. We'll take a look at the ones that grabbed our attention. Jobless numbers came in this week, and they did tick up another time, and actually 1.4 million people unemployed again, grabbing unemployment insurance for the week. We'll get everybody's analysis on that. Pretty bad economic data. Doesn't paint a good picture for the economy in terms of a V-shaped recovery, but we've talked about that for a long time. Other things in the news like Bank of America and Amazon and Buffett actually getting back in and buying some stock. We'll analyze all of it and get down to business here. We've got a full crew here today. We've got Noah Davidson back from vacation. And Noah, you got to visit the mountains, enjoy some time away from the markets for a little bit. How does it feel to be back?
Well, I'll tell you what, Tim. It was awesome to get away. I mean, we did everything. We did went cave spelunking, we went river rafting, we went boating, water skiing, mountain biking, and I come back and I have no idea what's going on in the world. It's been a nice mental break. According to the charts, not much has happened, but when I look through some of my news feeds, I'm a little astounded. So I'm going to need you guys' help playing catch up.
Yeah, Joni loves Chachi. Let's get to work. We got a lot of stuff to talk about.
Joni does love Chachi. Don't you forget it.
I was wondering how long Mark was going to go with the pleasantry. I know he's excited about today. I know he's excited.
I'm on one today. So, if for those of you easily offended at home, put your earmuffs on because this is going to be a
big boy
jam-packed
on, boys and girls. Put them on. Let's get rocking.
Well, let's get down to business then. Matt is leading the analysis here. Mark has got a lot to say, I'm sure. Lots going on in the news here today.
I'm just going to let Mark do what Mark does best.
Well, that's going to be perfect.
Well, actually, I take that back. I completely 100% take that back. Let's still have to filter a little bit. But no,
listen, I'm not going to swear, but the earmuffs I want to put on is for all of the Uber bulls out there. It is going to be Daddy Bear all day long because I'm going to be dropping the bearish arguments hard all day long today.
Mark DeBear. He's taking the throne. He's bringing it back. He's going to give the analysis and all that kind of stuff. Well, let's start with tech because, Mark, if you want to make a bear case right now, the one index I'm looking at across the markets, first of all, is technology. We're seeing a little bit of a pullback into these moving averages. This is 3 red candles in a row for the first time since last week, actually. And if you look back at this chart, we've got a little momentum kind of rolling in here, Maddie. It's not that significant yet, in my opinion, from a chart perspective, but it's noteworthy in terms of rotation. Let's start with the Nasdaq here, Matt, and what you're seeing in that chart, as well as this kind of tech sell-off that we're seeing in the markets today.
Well, honestly speaking, outside of one day this week on Monday, when you had, the Nasdaq rip roar back up into that resistance channel of 11,000, the Nasdaq's been a snooze fest ever since Noah left. No, it's your fault. It is completely Noah's fault for creating the snooze fest. You took your liquidity away, Noah, and it was like the central bank taking their liquidity away, right? All of a sudden,
it's like, I put everything on hold, and I just kind of told the market to stay put. I'll be back in a minute, and we're good.
So basically, Noah's not putting market orders to buy every tech company out there right now. But no, outside that one day, you're seeing a really stagnant, neutral condition in the Nasdaq over the last couple weeks. I wouldn't say it's bearish in any capacity from a technical perspective. You really haven't even broken any major support levels, that being at right there at 10,500, right where the 20-day moving average is. And until the market actually breaks that 20-day moving average, which it has not done since March of this year, you still got to look at it from a bullish perspective. Maybe you're a little bit more cautious right now, given the fact that the price action is not performing in the same capacity that it did over the course of the last 2.5, 3 months. But as of right now, you got a little bit of short-term, but you do have a little bit of short-term consolidation, stagnation, neutrality right there between 10,500 and 11,000.
Mark, why do you think we're getting a little bit of profit taking in tech right here? Is this just overstretched valuations? Is this the market
Well,
rotating?
yeah, you don't even need to go beyond that. It is
Okay.
overstretched valuations in tech. That is all it is. Tech is still wonderful in the future, right? Microsoft's still a great company. Netflix is worth something. Tesla's worth, I don't know, something, I guess. But like, it's just a valuation thing. And the valuation thing has been coming up in the chatter amongst Wall Street people quite a bit. And it's like, it's not, this isn't a secret. This isn't some great, oh my gosh, Microsoft is trading at 35 times earnings, or Netflix is trading at something, and Apple. I mean, who was it today that came out? It was either Goldman or JP Morgan, and basically told their clients, get out of Apple. It cannot sustain itself. So this sentiment away from tech on valuation, this is classic Wall Street, right? Run it up, get out, leave bag holders in the short term for individual investors. And it's just what's going on right now from a sentiment standpoint. Steve Grasso on, I don't know if you know who Steve Grasso. I watch the 5 p.m. Eastern Fast Money on CNBC every day.
It's Steve Grasso. Yeah.
Steve Grasso was on there yesterday, and everyone was talking what they're doing, and he's like, yeah, I got out of every bit. I don't own a share of tech right now. And that's the sentiment that's been floating right now. And so when these earnings come in, and we'll talk about specifically Microsoft earnings, a fine earnings report, right? Microsoft's a fine, wonderful company. That's not the question anymore. It is it worth the valuation it currently is? And Wall Street, more and more, the firms that advise clients and the traders on Wall Street are saying, yeah, we'll buy Microsoft. Karen, I can't remember what her name on Fast Money yesterday. Love her, absolutely love her. I think she is wonderful. And she's only bull. She never goes short. And she's like, yeah, I own Microsoft, and if it dips, I don't think I'm going to add any more. And so there's just this mentality away from tech that it doesn't mean tech's going to fall and have this like 25% decline, right? But what it does show you is that momentum is probably done for now, and we could be looking at more of a trading range develop on tech in the short term.
Well, Mark, real quickly on that. I mean, everything you're talking about, in terms of that rotation, we're starting to see that, right? We're starting to see that in the charts. You see slowing momentum in the Nasdaq. You're seeing a double top in the Nasdaq. You have not seen a double bottom yet. We mentioned Microsoft, and we're obviously going to break down their earnings here in a little bit, but it doesn't take a master technician to be able to read the momentum shifting in Microsoft, right? With Apple, I mean, Apple here, and again, I'm not throwing shade on these companies, but you are seeing a little bit of shift here. Apple has not closed underneath its 9 EMA since April, right there. And yet this is the first day in front of earnings after a massive run up coming into earnings that Apple's now shown a little bearish tendency, down 2.73% on the day. You're seeing that. You're seeing further evidence of that rotation that we talked about this last week, guys. I literally brought this subject up like a week and a half ago on Monday or Tuesday of last week about rotation from aggressive to value type companies, those distressed areas of the market. And even in the podcast a week ago, one of the biggest questions I had coming into this earnings season was these high flyers. Like a Microsoft, for example. Microsoft has been a juggernaut in the second quarter from a technical perspective. And Microsoft's earnings report, guys, was amazing.
Yeah, it was good.
It was a great earnings report.
There wasn't a bad thing in that earnings report. And it was like, literally, I called Tim last night and I'm like, Tim, Microsoft's down 2%, but I'm looking at these numbers and I'm digging into Microsoft. I'm like, the only flaw you can say is their cloud business didn't grow 50% for the first time, but yet it grew 47%. Like that's a good growth number in that area, Microsoft. So, I took their actual numbers, and we'll give their numbers here. $1.46 a share, beat the 138 expectation, 38 billion versus the expectation of 36.6, 12.8% year-over-year increase in revenue. They came in and reaffirmed guidance. They had a record number of net profit, not revenue, guys, not cash on hands. They had a net record profit of $11.2 billion. And the cloud computing services, continue to grow at 47%. That is a really, it's not knock your socks off amazing, go streaking and just start throwing $100 bills around the neighborhood type report, but it is a fantastic report. So why is Microsoft down? Well, the question for me coming into the earnings season, we've talked about the 3 open questions I had, was on one of them was stocks like Apple, Microsoft, Peloton, Zoom, Netflix, these high flyers that have had massive price appreciation coming into the last quarter. Can they continue to build on that momentum, with good earnings or lukewarm earnings? Bad earnings, absolutely not. But the early evidence is to suggest no. The early evidence is, even if they have a good report, even if they have a great report, i.e. Microsoft, well, let's lock in some of that profit. Even if they have a lukewarm report in a very popular brand-based company like Netflix, well, let's lock in some profit. Well, in some of those distressed areas, man, that report in United Airlines was a disaster yesterday, an absolutely unmitigated disaster. You cannot get worse than what United reported yesterday, until we talked about Las Vegas Sands later today. But it was just an absolute disaster. And what United do? It did nothing yesterday, and it's up 10% today, right? And so when you're talking
Matt,
about,
I think we have an earnings theme. I really do.
It's
High
early,
flyers,
Mark, but it's early, but we're seeing it a little bit.
High flyers better produce outstanding growth results, or they're going to get punished.
Well,
i.e. Netflix, i.e. Microsoft.
Okay. Just talk about Tesla for a second, right? And Mark, I want to give you the floor later on in the show a little bit.
I was going to say Tesla.
Okay. But again, let's talk about Tesla for a second, and then we'll go back to Microsoft. Tesla's earnings numbers, guys. Now we can get into the conversation of book cooking and non-GAAP earnings and creative accounting and all of that stuff. And I'm gonna give you some time to lay out your argument here on Tesla, Mark. But Tesla reported a profit for the 4th consecutive quarter. They're going to be included into the S&P 500, which is big for index and passive investing. They also saw a EPS beat at $2.18 versus the expectation of 71 cents. They also saw a revenue beat at $6 billion versus the expectation of $4.7 billion. They announced a Cybertruck factory in Austin, Texas. And they also discussed improvements and further improvements in the autonomous vehicle part of their company by the end of 2020. If all you did was look at the numbers and you could care less about what the price is, you can care less what the company is, it was an amazing report, right? And initially market surged. It was volatile. I watched it minute by minute last night, but it was initially market surged. But what's it doing today? It's down 3.4% on the day. Why? Well, because you're up 100% in the last quarter. You're up 300% year to date. You're priced to you're not priced to fly. You're priced for perfection at that point.
I guess traders didn't want to pay 2053 profits in 2020 on Tesla today.
But again, and again, I'll give you a second there to kind of give me the bear thesis on Tesla here. But the reality is, guys, Tesla had a robust earnings number, and they're selling today. The why is not the why has already been answered to me. You were priced to do godlike things, and you didn't. Microsoft had an amazing report, down today. Apple in front of earnings, down today. Tech, Russell 2000 here, guys. Small and mid caps breaking out of 1500 potentially today. Nasdaq's down over 1% today. So again, I still think it's a little early, But Mark, this rotation that you're seeing from Wall Street today and yesterday, all over in the news, you saw it on CNBC, all over the news yesterday. What were we talking about literally a week and a half ago? That same thing.
As always.
Well, I would say they're late, but
no, they're always late. Listen, they're always 4 or 5 days late on us. Listen, and this doesn't mean tech is trash, right? It's just it is a shift in sentiment. It is likely a true attempt. Now that doesn't mean, I mean, I could go on the small caps having their. I mean, I'm not saying the small caps is a good investment, but what Matt is saying is that I think you really are seeing a concerted effort. Now I don't know if it will last, of a true rotation into different names, taking profits on techs, putting money elsewhere.
Well, let's stay with those two big names, though, and get thorough analysis on them while we're kind of digesting and getting through the numbers. Let's go back to Tesla for a minute because I want to hear Mark's take on this. We've got several comments in the chat. I do want to get into it a little bit. What were these environmental credits that they booked? Because that's how they turned a profit, right? I mean, pretty much is what I was reading.
Well, again, they listen.
Let's save the Tesla conversation for about 20 minutes until we get into earnings, because it's a long conversation, right? And I'm going to lay out a lot of the bear arguments that are being made by a lot of smart people on Tesla.
Just really quickly, because I do want to get Mark's take on it, because I think he makes some wonderful points. Dana, they are regulatory credits for emissions. And so other car companies who are not nearly as good at environmental situations as Tesla is, they captured close to $500 million on the actual earnings report. And part of the bear thesis there, Dina, is the fact that they're rolling some of those credits into this earnings report to show that profitability so that they could get inclusion into the S&P 500. And that is bad accounting. I don't care what company does it. It's bad accounting. And quite frankly, I like Elon. I like Tesla. But if it's bad, it's bad. I mean, if JP Morgan did what they did, we would rip Jamie Dimon. We would.
Yeah. Yeah, no, we would be very critical of it, obviously, and we would be very much questioning, but Tesla bulls don't. We'll punt on that conversation because I do have a few takes on the other side of it here in a few minutes. Mark and I might disagree on this one a little bit. We'll have that when we talk earnings one at a time.
So in 20 minutes.
I think it's important to have that conversation though, guys. I really do. And for me, because, you know, with Tesla, and again, I like Elon Musk, but I'm looking at these valuations and price performance, and it makes no sense to me.
In 20 minutes, if you want to see what it looks like to have a grown man get spanked in public, watch Tim and I argue about Tesla in about 20 minutes.
All right. We will do that.
I'm going to paint the future for you guys. Mark lays out an extremely articulate, amazing, factual, numbers-based argument. And Tim says, it's all about ESG, man.
Look at the nuclear bomb. It's so pretty. Yeah, that's exactly right. There's no doubt about it. By the way, looking at the indexes, Matt, you notice the Russell. It is.
Are we all going to start saying it's all about that, man? I hate the fact that I just did that. Somebody punched me in the face.
Oh, party at the moon tower. You know, RUT breaking out, Nasdaq on a little bit of a pullback. The S&P is holding its breakout right now here, Matt, in terms of just price action. It's still above that old pivot point. I'm also very interested in the Dow on a little potential breakout. The diamonds are even set up. And you think about Dow components, some of these stocks have already reported earnings, you know, and we're still pushing up near that pivot point on the Dow. Matt, which of the indexes are you most interested in right now?
None. I'm interested in the comment section in our show is just getting better and better and better. I just absolutely love it. I just absolutely love it. So Dina says, when a naked trader stays baking, get your cell phones ready. I can't get that picture out of my mind. Go to somewhere else, T.
Yeah, I like it. Just looking at the relative strength in the Dow, I think that we might see a pickup based on the theme that you guys are talking about, you know, a little rotation. The Dow has banks in there. They have industrial components in there. They have dividend payers in there. I think the Dow might be in play here, the diamonds.
Yeah. And Tim, when I say rotation, doesn't mean the Nasdaq has to just go tank style,
No.
right?
No,
That is not what we're talking
and
about.
let's set this right. I think everybody here, and tell me if I'm wrong, at some point tech becomes very, very attractive again on a valuation standpoint.
Absolutely, 100%.
This is not an argument against tech. I am firmly in the, if I had to
Tech.
own things for the future, it's almost all in tech right now.
Yeah,
You know, unless it's a Boeing at a really discounted price or a Disney at a really discounted price.
I mean, okay, just think about it like this, guys. All right, if you're looking at a potential trade setup today, okay, and remove the indexes from the equation, then let's just say this is a currency, this is a stock, this is a commodity, whatever we're looking at making a trade today. And you have the Nasdaq, looking at the Nasdaq here, good trend, good pattern, but yet we now have a double top, a little bit of extra volatility. If this was a stock, I guarantee it would be vetoed from a swing trade. I guarantee it would be vetoed from a swing trade. Number one, you're too far from the breakout channel to get a swing trade. That's number one. Number two, you have slowing momentum and trend. Number three, you have a double top. Number four, I can go on and on. It would be vetoed, right? But when you're looking at, and this is what I'm talking about rotation a little bit, is because some of the time when I'm looking at potential rotation in short terms, guys, some of it is not just market performance, but others is based on technical setups. If you're looking at the Russell 2000 here, you just reclaimed that 200-day moving average, you high based for the last week, and now you're breaking out of 1500. If that was Google, every single coach would have that on a scouting report. Every single coach would. Right? Looking at the Dow Jones here, same type of situation. You just reclaimed the 200-day moving average, you high base, maybe a little flag based pattern, kissed off a rising 90 in May, and now you're threatening to break out at 27,000. Significant whole number on both the Russell 2000, significant whole number on the Dow. And I promise you, if you were to remove the symbol from the equation, active traders would prefer the breakout on the Dow at 27,000, and they would prefer the breakout of the Russell at 1,500 than they would looking at the Nasdaq in a double top slowing momentum type technical situation. To me, it's really that simple when you really break down these indexes. And that's why, I mean, evaluation is one of the things why I thought we might see some rotation here. But it was also because I was seeing a little bit of slowing momentum in the Nasdaq. I was seeing a little bit of slowing momentum in the S&P, and I was starting to see some of the down, some of the mid-cap components pick up. But mostly what put me on that sector rotation type concept we talked about last week was you were starting to see this in the individual components of the sectors. You were starting to see technology sector do the same thing. You were starting to see communication slow down, and you were starting to see financial utilities and consumer staples and some of those other distressed areas in the market start to pick up steam. So I'm not really surprised by what we're seeing a little bit this week in the market, but I wouldn't call the Nasdaq bearish by no means.
By no means. And tech is going to have
Big
some
days.
monster days like it did on Monday.
Yeah.
Like tech is going to have some days where you're going to have virus news, right? And there's that one day rotation back into debt that makes a great day trading day. So I think tech's going to have some monster days on technicals.
Let me paint that picture a little further, because I agree with you, Mark. I just don't think that day's like today or tomorrow or Monday, right? You know, but let's say the Nasdaq holds that 10,500. I mean, the Nasdaq has still not even touched the 20-day moving average, guys. I mean, we're talking ultra short-term analysis here. But let's say we consolidate for a week in the Nasdaq, right? Well, if we consolidate a week for the Nasdaq, what do you think Apple's doing for the next week? Consolidating, right? What do you think Microsoft? By the way,
did Apple finally hit the 20? By the way, I'll go back to Apple. I got to know this. Did Apple finally hit the 20-day moving average?
It finally kissed the 20, broke the 9. It finally did do that. Yes, but but my point is, let's see Apple break the 20. Let's see Microsoft close underneath 200. Let's see Amazon, a juggernaut, a double top scenario in Amazon. But let's see these markets break support first, right? Let's not be preemptive, because Mark, what do we always say? Bet on support.
Yeah, mostly all of this is a word of caution to not have uber aggressive strategies like buying out of the calls that have worked for so many on tech in the last 3-4 months, and to be over diversified in all tech trades. That's what the tone in our voice is, mostly along those 2 points, because tech's been the easiest trade in the market for 4 months, right? Just buy tech, buy something out of the money.
And Mark, tech's going to be the easiest play in the market for the next 10 years, right?
You know?
But there's going to be moments where you see rotation. There's going to be moments where things get blown up a little bit in the short term. All I'm seeing right now, and again, a little bit of this was just these high flyers coming into earnings, is that I'm seeing Wall Street kind of tip their hand a little bit, saying, you know what, we're going to be using these earnings numbers and the increased participation during earnings season to reallocate certain positions, right? In the short term.
Yeah. No, and that can continue, obviously, and we're going to be tracking that day over day over day over day. But there are some major themes in the market that actually could derail every one of the sectors, quite frankly. There's some other things and some other storylines that are developing right now I do want to get through before we get into individual company news.
Yeah, that whole cautionary note on tech was just on sentiment. That's not even touching everything Tim's about to talk about.
Broad market theme. Let's start with China, actually, Mark. Obviously, some stuff happening overnight. The FXI here index, obviously, we got that pullback. And I still like some of the charts on some of these tech stocks in China, but 3 days now of hesitation.
Up, bro.
I know.
Yeah, it's heating up. China, the US heating up. Mark, what is going on with, just give us, I mean, it feels like we have to give it an update geopolitical situation between the 2 biggest superpowers in the world every day.
All
so
right. Well,
what's the latest update?
Let me give you the update. No nuclear bombs have been fired yet, so we're good on that level, Tim. So those shooting stars are still shooting stars right now. Here, I'm going to sum up the entire state of the Chinese situation with the comments from the Global Times editor. Now, if you do not know the Global Times editor, he is essentially he is absolutely entertaining to no end. He is the Baghdad Bob of China, but he's the Baghdad Bob with some sarcastic wit and bite to him. All right. So the Global Times editor, in response to the closing of the consulate in Houston the other day, and there was speculation in the next 24 hours that China would do a tit for tat, that they would close a consulate in China in that tit for tat. Well, he said, hey, he's like, listen, you ain't getting off that easy. We're not going to let you off that easy. When the time comes, the true retaliation will involve real pain for the US, and it will also be unexpected. All right. So take that what you will, right? If you're somebody who's ultra paranoid like me,
that stuff right there.
If you're someone that ultra paranoid like me, who has been worried about China for months now, then you're going to take it a certain way. If you're in the, hey, well, everybody just works it all out. But for market price action, the amount of headlines being dominated in not just financial media, but also mainstream outlets like CNN and Fox, increasingly focusing on this hostility. It is really, really, really bad. And it has the chance to escalate. Now, will the true retaliation be some real pain and unexpected? I don't know, right? Like, hey, your guess is as good as mine. But there is no doubt that we are reaching a point in hostilities where something unexpected could happen at a higher degree of likelihood than before. Now, maybe that's still 10%, but it's a lot higher than it was, right? There was a note out by an analyst just to say, Strategy Wealth Partners, Mark Tepper says, on the China-US headlines, basically be very, very careful. And he specifically mentioned Apple and Nike. Now, I could throw on Intel, I could throw on Micron, I could throw on a few other companies on that list. But be very, very careful with these companies specifically, because if there is a retaliatory measure of some level, you know, if you really wanted to hurt the US, go out one of their prized blue gems, you know? So
if you really want to hurt the US, you start talking currency.
Well, that's obviously there's.
But that's all that's nuclear option type stuff.
So
That's not I just want to stick you with the knife in your gut type stuff.
So the market is finally paying attention a little bit to China. Now, watch, listen, the market lives in a 24-hour news cycle. If nothing happens in the 24 hours, people will forget it till it pops up again. But we like our traders to be a little bit more prepared. Now, have I done anything with naked puts? No. Like, I've sold 3 more naked puts this morning, so I'm still being cautious. I'm still playing it to the side, but I'm being very, very careful as a whole in where I'm allocating and how I'm trading, and I'm making sure that I'm not over leveraged, because whether it's this or stimulus, in which we're about to talk about, the chance of something blowing up on a big day where you have a 4, 5, 6% down day because of an unexpected event is not likely, but it is on the table. And so you have to make sure you're not over leveraged. I'm still playing to the bull side, right? Cautiously, still to the bull side, but you not over leveraged, not overextended. I think it is particularly warranted. Now, it's always good advice, but I think it is particularly warranted in this market.
Now, how do you read the rhetoric? I still read it as kind of posturing personally. I know that it's been ramping up here. Risk assessment, like Mark says, has to be increased a little bit. How are you reading all of this stuff right now? I don't think China's going to bomb some ship in the South China Seas. I personally don't. Maybe
no, neither do I.
So
I hope not.
I hope not as well.
That would be a really, really, really bad thing for China, the U.S., and everybody involved. Now, I historically speaking, Tim, usually when these types of things ramp up between 2 superpowers, they figure out a way to fight a proxy war, right? One way or the other. Where do you fight a proxy war with China?
And listen,
U.S. debt, U.S. treasuries, currency.
Dude, almost all the articles over the last 24 hours do not have an answer to that question. Nobody's making it good. They specifically say, we have no idea what the retaliation, if they do, might be.
I mean, I was skipping out there for a second. Am I back, guys?
Oh yeah, you're back.
You're back.
Okay, sorry about that. But with China, with Russia, I mean, we'd go for 50 years. We'd go fight a proxy war in Afghanistan or Iraq or Iran or somewhere in the Middle East or somewhere in Africa or somewhere in South America or whatever the case might be. With China, you're really talking economics and you're talking currency, right? So if you're talking legitimate retaliation, you got to start talking about the dollar versus the yuan and what they do from a currency manipulation perspective. If they really want to harm the U.S., you're talking about dumping treasury, is what you're talking about. The Chinese government is one of the largest purchasers of U.S. treasury bonds, and so that's what you're talking about. And you're talking about maybe China goes to the NDB and they start talking with the BRIC countries about further escalating or further increasing their non-US dollar trade transactions. That's what you're talking about. You're talking about the Russia and China, trading oil in non-US dollar transactions. That's what you're talking about. And so what type of retaliation China can come back with, I mean, these small things that they could do, I don't think would have a big impact. The big things they do would have a macroeconomic impact. So I'm thinking, I mean, if they're not going to do a tit for tat, what are they going to do?
Yeah.
I really have a hard time figuring that one out.
I do as well. And part of where my head goes with all of this, guys, and I want to just throw this out there. I mean, in 3.5 months, we're going to have a presidential election. Wouldn't you just logically assume they're looking at this and saying, hey, why don't we just wait this cycle out? I mean, Trump is down 8 points in the polls. And if the problem is with, the Trump administration that they're not negotiating well right now, it's the rhetoric. Wouldn't they just wait through this, Mark?
No. And I think if you see China close a consulate in China, that's a wonderful sign. Like that is alleviate short-term risk tremendously, because that would be a true tit for tat, equal measure against your measure type thing, and not stepping it up again. If China does that, because I think you're right, Tim, I think you're right in their stance, that would be not bullish, right? But it would take that really big risk off the table. It would make me feel a lot better about all my.
Well, and
existing
it also
positions.
is the most logical choice here. I mean, if you're actually looking at this and you remove the emotion, you say, okay, let's remove one of their consulates and let's just wait out 3 months. I mean, that's the logical choice here, and that's why I guess I don't get too concerned with it, because I just don't think China, as of right now in this economic environment, I just don't think China's ready to go nuclear with currency.
Mm-hmm.
Could be wrong. If I am wrong, we better be assessing it that day. But as of right now, I'm just not that concerned.
No, I have more worries about the Trump administration ramping up
Their side of it. Yeah.
the bear side of it, like pushing and pushing and pushing and pushing. Because once again, if Trump finds himself down in the polls like he is 50 days from now, 60 days from now, listen, one thing that Americans agree on, and the numbers on the polls are China, like that's what unites Democrats.
There's an
independents, and
anti-Chinese stance in
Republicans.
America right now.
Yeah.
And so does Trump push that agenda that he's down in the polls? America's tough guy, kind of like Rudy Giuliani, the tough mayor stance he took in the early 2000s. He's really running right now on law and order. That's what he's running on right now. So it'll be interesting. It'll be fascinating. But I just don't see China specifically, doing anything aggressive when there's a very important election in just a few months, with most polls. And I know the polls were completely off in well, not completely off, but they were in the margin of error, but they, were predicting a Hillary Clinton win, and Trump came back and, did really, really, really well. So, polls can be what polls are, but with the polls where they are right now, I just don't see China doing anything dramatic until post-election.
Mm-hmm.
Yeah, I hope they close a consulate, because that would take the short-term risk off the table and put it in Trump's hand. And Trump's probably not going to do anything for 5-6 weeks. So it takes that short-term risk in the analysis off, where we can focus about all kinds of other risks.
Oh, and there's plenty of other risks, by the way. I mean, China is one theme that we're going to keep watching. Another one, quite frankly, we're going to have to keep watching economic data as it comes through. Stimulus, whether that's going to happen. Let's do stimulus next. Let's talk about it. Marky, give us the updates. I saw that the Senate and the White House kind of agreed to some principal terms that they're going to put into some kind of proposal that is not in the same line of what the House wants. What do we know right now
All
about
right,
stimulus
I'll give you the
progress?
bullet points, and then I'm going to go get a refill on my Diet Pepsi. I'll let you guys do the analysis on this one. All right, so here's the bullet points. So the Republicans have finally gotten together, it looks like, and come up with their initial proposal so that they can start negotiating with Democrats. Key points of the proposal. Initially, early yesterday, it looked like they were going to suggest to cut down unemployment benefits from $600 a week to $100 a week. Now, they have amended that to Mnuchin saying today that unemployment benefits would be on some scale of about 70% of wages. So that's a lot more encouraging as a starting point, because the market would not have responded well to the $100 a month. I mean, $100 a week. 105 billion for schools to reopen. A targeted second round of PPP for certain companies whose revenues are down more than 50%. So not just anyone gets them. If you're really hurting, then you'd be eligible for the PPP, which makes sense.
Hedge funds. They don't want hedge funds to get PPP loans.
Yeah. So,
so hedge funds should not be getting PPP loans. They were not distressed in any capacity.
One day someone's going to write a paper on all of the companies that got money from the first PPP, and AOC and Bernie Sanders camp are going to use that for fodder for a decade.
Oh, Mark, all they need to do, and I strongly encourage this, Tim put me onto it. Joe Rogan had Peter Schiff on his podcast last week. I strongly recommend listening to that.
You had a fleecing of America in that first PPP, but that's a conversation for another day.
And Peter Schiff, a stone cold market assassin capitalist, he's like, I don't understand why anybody on Wall Street took any amount of PPP loans. It's not like they stopped, charging fees to manage money.
Yeah, their business was up, quite frankly. We saw that in profits in JP Morgan and Goldman Sachs. We know Wall Street firms had a good quarter. Yeah.
And literally, it is the kind of bullet board material that AOC and the ultra liberal camp Well, they'll use that for a decade, and they'll get a lot more support
Well, and
because of it.
quite frankly, even on the right, they don't like that though.
All right,
I mean,
couple other things.
Republicans don't like that.
Mm-hmm.
Couple other things in the Republican proposal: tax credits for companies to hire workers, direct payments towards individuals, although they haven't decided on the monetary level. Initial talks are that households under 45,000. So initially, the first one, if you remember right, it was 75,000 for individuals and 150 for joint. Republicans want to make that a much lower threshold, so only individuals in a lower income bracket get it. And that the big one, or at least I think is a bigger one, in the original bill passed by Democrats many months ago, they had $1 trillion allocated for states and municipalities. The Republicans have zero money in their initial proposal, with Mnuchin, who's Mr. Cheerleader, right, always saying how everything's going to be good, specifically coming out with a dour statement that the stimulus package will not be a bailout for mismanaged states. So there are the details. I'm going to go refill my diapers.
Grab a Diet Pepsi. I did not know you drank Diet Pepsi, by the way. You know, that's an interesting choice. But Maddie, you know, analysis here. There's a couple things that come.
Judgment to yourself.
You know, a couple things that kind of grab my attention. Number one, the no money for state and municipalities. Obviously, that's going to be a political issue here. You're going to have split on this. The House is going to demand it.
No money. That's not what in the Republican plan. It is. They're not going to bail out mismanaged states.
So they're going to handpick.
Extremely subjective, and it's going to be chock full of criticism there. But I'll leave that to the Democrats to fight that battle. What's interesting is Trump didn't get his payroll tax cut. The Republicans were not unified on this. It took a few days for the Republicans to really get unified, and I'm not even sure they're currently unified under the McConnell plan. So it's going to be a fascinating next couple of weeks, Tim, in this. And the reality is they are substantially apart right now, the Democrats and the Republican plans. The Republican plan basically calls for about $1 trillion in further stimulus. The Democrat plan right now, I believe, is passed in the House last week, was about 3.2 trillion. And so there's gonna be a lot of negotiation over the next couple of weeks. Nothing has changed my overall opinion that deadlines are important and a deadline is going to get this deal done. What the final bill looks like is going to be fascinating because the Democrats and the Republicans are so far apart right now.
Mm-hmm. Mm-hmm. It's going to take some time for that negotiation to happen as well. Obviously, there's a lot of split in it until we get more clarity. And we're going to have this stuff in the news on a day-by-day basis, don't you think, Matt? I mean, we'll get an update like on every day.
A lot of news, and there's going to be a lot of over analyzing it, and what this politician says on the left and what this politician says on the right. And every time I'm going to be like, I don't care what they say on a daily basis. They got a deadline they're working to. They're going to get a deal done. Mm-hmm. I cannot envision a scenario right now where the Congress of the United States does not come to get a deal done here. Now, I'm not saying we should do a deal. I'm not saying we shouldn't do a deal. I'm just saying I don't see a scenario with 3.5 months to go for an election where there is upwards of about 8 Republican senators that are up for re-election in contested battleground states. I don't see them not getting a deal done here. Mm-hmm. Mm-hmm. Politicians love spending money in an election season, guys.
I agree with that. I'm with you 100%. I believe that as well, but I think that does add extra risk if they don't get a deal done, because I think the entire market is assuming what you and I assume here, Matt, is that they are going to do something. If they drop the ball on this, that's a problem.
Of course it is, and I think they all understand that, which means they're going to get a deal done. The devil's going to be in the details, and one of those very important details are states. Mm-hmm. How much funding goes to these really hard hit states like, Florida, Georgia, Texas, Illinois, New York, California? Does the federal government come in and support those states? And if they don't, does that have an economic impact? So it's really going to be the details here, T, and we need to wait to see the details. But I fully expect the deal to get done.
You know, and one of those details is going to be around unemployment insurance and some of the stuff that they were adding on top of it. It's interesting. We're talking about this today, and they're starting to push this forward. They're going to pull those unemployment benefits that were the extra $600 a week on a day where unemployment claims and jobs data came in. The economics of this, Matt, are not good. This is not V-shaped recovery type of data. In fact, if you think about it, the biggest unemployment week in the history of the market was in 1982, 695,000. And now we're saying 1.4 million, and people are just kind of shrugging it off. It's an uptick, Matt. You know, you're seeing that data kind of turn over. It's an interesting graph right there. How are you reading this, Matt? It came in higher than expected. We're still 4 months into this, and 1.4 million people filed for unemployment last week. What's your read on this, Matt?
My read has not changed during the entire time, Jim. I mean, I've been very consistent in my belief that I didn't even early on. I mean, I'm talking March. This is not going to be a V-shaped recovery. It's not going to happen. There is no V-shaped recovery here. Even the Fed was talking about, they were saying it could be if they did this, if all these, stars and moons aligned, it could be a V-shaped recovery. So even the Fed was throwing cold water on V-shaped recovery analysis. The V-shaped recovery analysis was only done from a political propaganda type stuff. The data just was never in the cards here. And I've said this regarding the labor market, Tim. I believe the labor market is going to take years and years to recover. I'm not sure we will ever see, and I'm not trying just to be radical here. You know, I don't do that. I try to be moderate in most things. I try to be consistent in almost everything. And the reality is I'm not sure we'll ever see 3.4% unemployment again, guys, in our lifetime. There's too many variables there. There are just way too many variables. So yeah, I think there's going to be complete shifts in labor mentality coming out of the post-pandemic to the point where some of the jobs lost in this environment, guys, they will never come back, ever. They will be replaced by autonomous type situations, the robotic movement to a certain extent. But, so for me, seeing the data over the last, it's not just this week, Tim. I mean, we saw an uptick on that, what we've seen over the course of the last 5 weeks. But really the last 5-6 weeks, we've seen an average of 1.35 million initial claims on that. You're really starting to see a floor start to form there. So to me, the data we saw in the unemployment claims today just furthers the evidence that this V-shaped recovery is not going to happen. But I'm not sure there's a lot of people in the market any longer that actually believe in a V-shaped economic recovery. I think most people are trying to project U-shaped recoveries, and they're begging that we don't get a W-shaped double bottom recession. So as of right now, the V-shaped recovery, I want to stop analyzing it because the data is just not there.
Hey, Larry Kudlow a couple days ago said he sees lots of signs of a V-shaped recovery. Trust him.
I know what Kudlow Baghdad Bob said. Listen, I also don't care what Baghdad Bob says. Anybody who takes their economic analysis from a politician, they got more problems than we can solve today. So no, I could care less what Larry Kudlow says and what the Trump administration says about the V-shaped economic recovery. Obviously, they need it for an election season. They need it for their base. They need it to show they're doing great things. And that doesn't matter to me. It doesn't matter to me in any capacity. The data is compelling. It's overwhelming. There's not going to be a V-shaped economic recovery. Can you have V-shaped recoveries in certain aspects of the economy? Absolutely, 100%. But overall, we are not seeing that in the data. Right now, the best case scenario economically is a U-shaped recovery where we start to recover, a lot of this economic power we've lost in the last 3 months, maybe within 3 years. But to me, this just furthers the evidence of a U-shaped recovery, perhaps even a W-shaped recovery, which is more prolonged.
I got to go back to China. The Wall Street Journal just Mike Pompeo is delivering a speech this afternoon on China, and the Wall Street Journal has gotten a copy of the speech that's going to be delivered, and it calls Chinese leader Xi Jinping a true believer in the bankrupt totalitarian ideology. And while he doesn't specifically call for a regime change, there are a lot of things in that thing that are
Who did he stop short of calling China?
China. Basically
Sorry,
calling
it's
for
so
urging
cute.
to change the Communist Party's behavior. Listen, you want to see China up the game, threaten their sovereignty and the ruling political class.
I guarantee you China did exactly what I just did and started laughing, but they're not going to get mad at that. They're like, whatever, Pompeo,
So,
come on.
but it shows you where the Trump administration is right now on the subject.
Listen, talk's one thing, that's fine, but I guarantee you President Xi Jinping just laughed the same way I did.
Let us hope.
Talk is one thing, and Pompeo can run his mouth. I mean, that guy is impressive. If you want to give him that, he's willing to say a lot of outlandish things.
Is that your cat?
That is my cat.
I was wondering if that's your cat or if that's a brush you're trying to
No,
brush
sometimes my cat likes to come up and join us in the party. So this is my cat. Say hello, kitty, 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 kitty. So.
Okay. What's the cat's name?
Xi Jinping.
Oh, that's funny.
He's a China cat.
So I'm going to ask you guys one simple question. Unemployment numbers make me think about the U-shaped recovery in the economy. So you got the economy, you've got China, and you've got government stimulus. Which one of them, do you think poses the more short-term risk to the market?
Stimulus.
Stimulus, not even close.
Lack of stimulus.
Yeah, it's not even close. Unless something.
Again, there is not going to be a lack of stimulus. A deal is going to get done. Now, I will eat crow if it doesn't, but a deal will get done.
A deal will do that. That is 100%, 99.99% guarantee. It's just, does the market really not like an aspect of the deal, right? That's the big risk.
It's like an earnings report, right? The
Very
market
much so.
has their expectation, and if they surpass or don't come close to the expectation, the market's going to move.
Yep, very much so.
Let's flash through the commodity market here, guys. I do want to get into individual corporate earnings here in a bit. So let's kind of work through this one at a time. Crude oil, not much there, guys. Anything that we need to update the team on with crude?
Crude is so boring.
Nothing going on there.
It's so boring.
Nothing going on there. Nat gas, by the way, I don't want to go into a long conversation. It is up 7% here today. Must have been hot or cold or something, Marky.
Well, it was the inventory numbers came out and they were reasonably positive. And in this market, anything can move quickly. And it's had a strong day off of those.
I don't know. I walked outside yesterday and it was really hot.
Well, it was cold yehdesday. It's hot today. I don't know.
Wait. No. 2 days ago, it was really hot. Yesterday, it was cold. Today, it's hot. Who knows? Natural gas is about as impossible to analyze as any tradable instrument is.
No, and listen. I'm going to get called out most likely on my natural UNG position. I'm not re-upping it until I'll take it. If it tanks again, I'll throw a flyer at a lower level. But I'm going to take the gift and move on with that part of my portfolio.
And I've completely avoided UNG and USO now for several months because of the contango risk. I just don't have any faith in it. Gold.
And let's go back on that a little bit, because if you're in a similar situation on UNG, I'll go into the contango risk on that UNG ETF on the commodities report tomorrow. But there's real contango risk there. So I wouldn't look at a gift horse in the mouse here.
Yeah.
I take the upward movement and run.
Yeah. Dive into that in the commodity report, Mark. I think anybody who is trading those type of commodities, they need to understand how that futures contango works for these ETFs. Gold, Matt, pushing towards 1900. It's incredible. It's the leader in the metals market here today. Looking across it, silver's kind of hesitating and whatnot. Matty, what are you seeing in the charts in the metals?
Just sexy.
They are sexy.
Amazing. Nothing. I mean, what do you say? It's running aggressive. It's running on everything we've talked about. And what else do you say? I can repeat the same argument I've told for 18 straight months.
No, I liked it's sexy. I think that is a good way to say what the gold chart right now looks like.
That's a real breakout. That's a genuine momentum breakout out of that pattern too.
Well, and if you remember,
happened on gold a lot, guys. That's not how this shiny little precious safe haven likes to drive. You got to love the price action here. Obviously, you're not reissuing, new positions at the top end of a channel, but that breakout was legitimate. Anything above 1760 was legitimate. Anything above 1800 was legitimate. And quite frankly, it's what I'll say to people who have not been enjoying the freight train that gold has had over the course of the last 18 months, but really, since the pandemic hit, wait for that next technical setup, because I promise you, there will have one. Whether it's a retracement back into a breakout channel, rising moving averages catching up to it, high base, flag base patterns, there will be an opportunity to re-up on gold if you have not participated in gold. So if you missed out on the run in gold, if you missed out on the run in silver, silver's doing very similar things, obviously a little bit more volatile as silver always is. Like we talked about yesterday on silver, be patient, wait for a new setup. They're always going to occur. And like I said yesterday, if we're right on the analysis on silver, don't chase it at the top end of the channel. Wait for the proper setup. You're going to have another bullish trade coming up here, maybe in a week from now. You're overextended, give it a little bit of consolidation. You can say the exact same thing on gold and silver right now.
Yeah. Yeah, they're still looking very beautiful. By the way, that we're going streaking thing, I got to admit, I did cover my SLV position just up above those levels as a way to just kind of grab a credit. So I guess I put my pants back on there, Mark, for a day or two.
Again, I mean, going streaking is not, after silver's around from 17 to 20, 21 and a half.
Right.
Going streaking is making the decision to uncover the call option to allow growth to happen on a potential breakout. When we're talking about something overextended, and Tim, you come in and what'd you sell? 23 call option?
I sold the 23. That's right.
23 call option. So if you sold the 23 call option, you're talking about silver would have to go above 25 in that short term. I think that's a great way to bring in some cash flow to offset some of the risk. And
I like it. I like the play a lot, Tim.
If it goes above 25, you're so far overextended, get called out, wait for that next setup. I have no problem with that.
Yeah. Yeah. And those cover call mechanics are very important as part of our Tackle 25 course, by the way. If you're out there and you've taken that course, I mean, that's where you manage, you add that short call, you uncover the short call. There's a lot of things that got to go into your rules. But guys, I mean, the dollar's down again here, Maddie. I mean, there's some things we could talk about with currencies, but I don't really want to. I want to talk companies here. There's too many that we got to get into and we've got to break down and analyze. We did hint at Tesla and Microsoft, but there's a bunch of other companies in the news here today. If you're out there and you're watching our show right now, we go through the same process each and every day whenever we do the halftime report. Welcome out at different moments in the show. I kind of stop what I'm doing and just say, hey, great job out there, guys. Hashtag Team Tackle. We appreciate you guys being a part of our community. We are 100.
Before you move on, markets are breaking intraday support, FYI.
We will take a look at it. You derailed me there, Marky. I was on a roll. I was ready to, just have some fun here and doing the whole thing. And the market's down 0.5%. They're not breaking down.
I said they're breaking intraday support, dumbass.
All right. Shots fired. All right. We know the tone what's going to happen here with Tesla in a minute. All right.
He didn't like your chuckle there.
Real quick. No, he did not. Easily triggered there. Real quick, if you're out there watching our show and you're not subscribed yet, we're about 100 from our goal here, that 10K mark that we've been aiming for a long time. We'd love you to be a part of this. Click subscribe, click the bell, come back and join us. And if you're watching right now, you've not done it yet, give me a thumbs up. We only got 39 people that have smashed that thumb button. Let's get a few more likes out there in the channel. Intraday breakdown there, Mark. Is there any news of note that is grabbing that? I saw Mitt Romney, news, but that's more on politics and whatnot. But I didn't see any news. Anything happening or just technical?
I'm always scanning in the show. The best read I have right now is it's the estimates of the extra unemployment would fall to 200 or 300 a week on the unemployment, the Pompeo thing. But really, dude, when momentum starts, right, don't take much to have it continue on an intraday basis.
That looks like just an intraday sell-off, kind of some of the weakness kind of happening throughout the day because it's been happening since the cash open.
Honestly, Tim, it's just continuation of the movement we've seen today.
Yeah.
I wouldn't take anything too big of it.
Stock talk. Let's do it here, guys. Matt, we've got probably 10 earnings stocks that we're going to go through. I think we do got to do a thorough analysis of the Microsoft and the Tesla. Matt, give us any numbers, any information that you think we didn't share earlier.
Well, let me just kind of reiterate the numbers here, Tim. Like I said, I felt Microsoft's numbers were really, really, really good. I don't see a lot of flaws in the report other than maybe just, oh my goodness, I wish they've made more money than they made. But 12.8% increase in revenue year over year. They reaffirmed guidance. They came in with $1.46 EPS numbers versus the expectation of $1.38. Revenue came in at $38 billion versus the expectation of $36.6 billion. They had a net profit of $11.2 billion, not revenue. They had a net profit of $11.2 billion. And their cloud computing services, which has been a very substantial growth area of Microsoft, fell underneath that 50% increasing revenue year over year for the first time. That did come in at 47%. The only negative, and Microsoft sold off, not on it sold off a little bit on the cash open, guys, but this is where Microsoft was initially when they sold. Here you see the earnings report right now. Literally within 5 minutes, you had seen that sell off. And Tim, the question, like I called you about 10 minutes after I was seeing, going through their numbers, and I said, Tim, this was pre-planned. This was planned to sell.
Yeah,
because the market didn't even have the time to digest the numbers.
No, Matt, that's a great call. That is a great call, and that feeds into your rotation argument. You are absolutely right. This market was planning to sell right off the bat.
It was literally, guys.
Yeah,
I mean,
you are 100%. That's a great call.
It was like, look at this, guys. It's 1 minute. 1 minute. You saw that price go down. And I'm just looking at him like, Tim, this just, like, I did not even have a chance to look at the EPS and revenue numbers before the market was selling.
No, like, you are right. Because, yeah, come on. They beat estimates, and then they just had an immediate sell-off of that magnitude in 1 minute. You are spot on, 100% correct on that.
So I feel this is just further evidence of that rotation theory. And not aggressively. You know, again, it doesn't mean the Nasdaq has to go into bear mode. It can just go into stagnant neutral mode for a little bit while the other markets try to catch up to it. But at the end of the day, I think this was pre-planned movement by Wall Street to reallocate positions. And so for me, I actually see the Microsoft as, at least their earnings numbers, really, really robust earnings. Nothing changes my opinion of Microsoft being a fantastic, amazing company, a company you want to own long-term for a variety of different reasons. The only thing that I think what happened in the report is it shifted a little bit of short-term mindset for the traders. And so for the trading community, they're looking at Microsoft right now. They're saying, okay, we were hoping for a breakout to continue the freight train of momentum in Microsoft. We didn't get that market response. So now we're just kind of in wait and see. And I think that's the proper way to approach Microsoft right now. Great company, great report. Let's see how the market responds at $200, right? That's a very important, significant number for Microsoft. It's the previous old resistance point for Microsoft. It's also one of those significant hold numbers. So I'm a little concerned with the price action coming underneath the 20-day, but that happens in neutrality. And quite frankly, the longer, Microsoft, goes neutral, the more I like a potential breakout of 216. So let's see how the market responds at 200. Let's see how the neutrality plays out over the next week or so. I do think if 200 does hold, there's going to be a good opportunity on Microsoft, but we got to see it first.
Well, and I think that's exactly the perspective most traders and investors should take right now, Matt. I don't think investors are getting off Microsoft. Anybody who owns it isn't selling on this news or this information at all.
Are you kidding me?
No.
The investors today are not getting at. They might not be adding to positions, but the only thing the investor class is doing today is saying, wow, why would you sell that report?
Yeah.
Like they're just upset they didn't make a lot of money on the overnight action. They're just questioning. The report itself was really, really, really good. And, I sent out a tweet after Microsoft posted earnings, and I just said, this is a really, really good report. I saw Jim Cramer talk about that. And he says, you know what, their revenue went up 47% in their cloud business. That's not a bad number. And I was like, you're right. Great point. That's not a bad number. And in fact, if you were to show me any growth company, right, that saw 47% increase in growth year over year, could you imagine what Tesla would do if they saw 47% increase in growth year over year? I mean, honestly,
They
could
would
you
have.
imagine what Zoom would do with 47% year-over-year growth, or Peloton 47% year-over-year growth, or any growth company 47% year-over-year growth? They would skyrocket. So I think this is a little bit of a just an initial Wall Street using the moment to reallocate positions, lock in some profit, and wait and see on tech.
Well, and if you look at the volume down there, Matt, on an earnings day, usually volume picks up. We just have an average volume day here, guys, on the earnings release. I mean, that's pretty crazy when you think about that. The small bit of profit taking, we're within the market maker move, within the volatility projections. And here's a simple reminder to anybody out there who's new to earnings. Company can beat the EPS number, stock can still go down 3%. It can have a great earnings report. It can be a great company, one that you love. It can still go down 3% because there is some just natural kind of moments here of volatility, Matt, where the stock can go up or down depending on just whether Wall Street buys or sells it. And I do think people need to remember that.
And especially when you're talking about Wall Street and how many shares they have, right? Sometimes, not a lot, but sometimes Wall Street and institutions or hedge funds use the volatility and the increased participation during earnings season as a way to reallocate. I'm willing to bet, guys, there were hedge funds and institutions last night dumped their shares, but they had made that plan a week ago.
Mm-hmm. Mm-hmm. We got to do Tesla now. I think people are calling for it. They want to see the Tesla analysis. All right, Mark, lay it out for me. Why is Tesla?
Let me give the numbers.
You give the numbers then, Matty.
Let me give the raw numbers. Tesla came in at a robust 218 earnings per share versus the expectation of 71 cents. Revenue came in, beat top bottom line, $6 billion in revenue. The expectation was right around $4.7 billion. Tesla saw a 4.9% decrease in year-over-year revenue. Again, coming back to Microsoft, what do you think Tesla would have done today if they had a 47% increase in year-over-year revenue?
It would have went up
today,
$400 or $500. Yeah.
Oh, Lord Almighty, it would have skyrocketed. Yeah. So obviously a little bit of negativity with that 4.9% decrease in revenue. They did see a slight decline in the core automotive business, and that's what really led to the 4.9% decline in revenue year over year. So they saw a slight decline, but it was offset by a massive increase in credits that Tesla gets for their emission-free type vehicles, and that was close to $500 million. They also announced a Cybertruck factory in Austin, Texas, and they also spoke about improvements in their autonomous vehicles by the end of 2020. So a little bit of good EPS numbers, decent revenue numbers, pretty negative year-over-year numbers, but Elon said we're going to have improvements in the future. So that's the numbers, guys. Those are the raw numbers. Mark, I know you were watching Tesla's report the same way I was yesterday. What was your response to the actual numbers here?
Hey, listen, all I know is I sold a naked put at $400. I got $20 for a 400 naked put expiring next week. I'm just hoping it doesn't hit it by next week because I don't want to take ownership. So that's what I think in my overall stance.
You wouldn't buy Tesla at 400?
Hell no, I would not buy Tesla at $400.
So you have an opinion. This is the most overvalued company in the history of the world, right? Is that what?
No, no. There have been far worse. Listen, I don't.
Tulips here.
No. Listen. I don't hate, and I jest. There is a price level I would take ownership because Tesla is going to have unlimited funding from now till at least 5-7 years, right? Until the story breaks. So it's not that there isn't an opportunity.
Did you hear that, Matt? You hear that? He snuck that in until the story breaks.
I'm with Hero. I would buy Tesla 400.
Tesla.
Market order 400. I would.
So, well, I got a naked put out there at 400. And listen, I'll sell some naked puts on Tesla if you get this 400 or 500 plot because you'll be able to get money down at 200-300 with the kind of volatility that would pick up. So there is a level because the fact that they don't, and this is the bullication, this is what has changed everything for Tesla in the last year. There was real worries that Tesla would go bankrupt just a year ago, right? How quickly things change in 1 year.
Mhm.
The fact that that is right now not a fear, 0% in the market, other than the Uber Tesla bears, which I'm not in the Uber camp. The Uber ones claim that there's massive accounting fraud that is absolutely making all of this the next wire card in the process. That's out there. That's why you can get $100 for a naked put on the 100 strike price. Think about this. You can't get 100. What's the Google? What can you get for $100 on the Google Leap contract? To put this in perspective, because so like go out to those Leaps January.
What January?
Yeah, you can get
100
like,
strike.
you can't get anything at the 500 strike on Google. Like you can't get anything. You go to Tesla, you can get $100 for that 100. You can get money at these things because there is a real genuine camp out there that thinks this is the next wire card, that this is absolutely ridiculous what they are doing with accounting, the lack of transparency. Google Tesla bears, Google Tesla charts, not Google, go to their Twitter, and you'll get the whole detailed argument. I've read all their points. I don't know if I buy them all, but it's enough to make me think. But it's why you can get money at things you can't get on normal companies, because there's a real fear of a wire card fraud. Let's just call it what it is. And once again, I don't buy all of their arguments, but it's enough to make one cautious. It's enough to make one cautious. Now, let's get into the specific numbers. All right, so regulatory credits is the reason. They had about 110, give or take, in income they made. About 400 plus million of that was through the selling of regulatory credits. It wasn't through the day-to-day operation of selling more cars. Now, the regulatory credit things, Tesla bulls, because I know all your arguments, Tim. I know all your arguments before you make them. Tesla bulls would say, see, hey, isn't it great? We have this endless supply of credits we can always sell, and that this is just a great part of being Tesla. Well, a couple problems with that. One, the CFO of the company even came out in the earnings and said, listen, I don't know if we can count, and I'm paraphrasing, obviously, I don't know if we can count on this indefinitely into the future.
Mm-hmm.
There's also fascinating in their accounts receivable, about 50% of the credits, they haven't been paid for. So there is real speculation that they are front running the credits, i.e. selling them out in the future, claiming them as income today in order to make it look good today. So the accounting things that they do, and I'm not a CPA, I am giving you regurgitated, intelligent bear arguments that I see all around the web. But there is speculation that this front running of credits, pulling them forward, they wanted to obviously have a good earnings report this quarter so that they could be eligible, not a done deal, eligible for the S&P 500 from their minimum criteria. Discounted car rates in China, a lack of consumer brand love in Europe, an increasing, what will be an increasing automotive market that is geared towards EVs. And I'm a huge EV guy. I think it's the future. I do. Absolutely. It is the future. 2025, at some point, you're going to have a large percentage of cars that are electrical vehicles. The problem with Tesla bulls is that they assume this, aside from valuation, the valuation, I don't even think it's arguable, unless you say that in 2037 or some future year, Tesla is going to dominate by market share the future automotive landscape of electrical vehicles. Now, of course, Tesla bulls say, yeah, we're going to be the only game in town. Tesla, Tesla, Tesla. You have increasing competition and technology. Every major car company is working on technology plans, this and that. You don't think there's going to be some winners in there that give Tesla stiff competition? The Wright brothers came up with the airplane, but they're not a publicly traded company today. the assumptions that Tesla will be this dominant force for the next 10, 15 years are priced in today. That's a lot of risk at these price levels. That is a lot of risk at these price levels to assume that they're going to have a dominant market share for 10, 15 years without any competition, with the company maintaining good management, with Elon not going off on a wild hair, offending his customer base through some political rant. There are so many assumptions to buy at today's price. Final argument, Tim, then I'll give the floor to you. The final argument today is you have to assume so many things going perfect in not only the automotive big picture EVs build up, but also Tesla's dominant market share within that space and proper management for the next 15 years. My goodness gracious, who the hell would buy Tesla today at these price levels? Having to assume all of that.
Mm-hmm. First of all, I don't dispute many of the valid things that you've talked about. Some of the risks in Tesla, I mean, I've talked about the same things, quite frankly. And was that the spanking I was waiting for?
I'm waiting for you to say something stupid.
All right,
that is my initial argument, counsel.
All right.
I'm waiting for something stupid so I can pull down those pants and give your fat ass a good whooping.
Here is some of the problem with the logic of going after companies like Tesla in the way that you've just done. Growth companies that go from negative PE ratios to positive PE ratios at some point are always going to have extreme valuations, not enough profitability to justify their market cap, and so on and so forth. I'm not long Tesla. I'm not an owner of Tesla. I don't own Tesla up here at 1,500, and I would not initiate a new trade up here at 1,500. But Mark, every criticism you just had, every bear of Tesla has been having since $200 a share. They've had that same argument at $400 a share and $600 a share and $1,000 a share and $1,500 a share. Simple analysis here is warranted, quite frankly. It is a wonderful company led by a charismatic leader that people want to believe in. In fact, even in the conference call yesterday, Elon Musk came out and said, we're not really interested in profitability right now. We don't really care. We don't care how much money we're making right now. You need to
come up with a lot more than Elon's cool and Tesla's awesome.
Not necessarily, because every great company that's over $1 trillion right now at some point in their life cycle, Mark, had a negative PE ratio. Every company that we've talked about, even the Microsoft.
Did I use the word PE ratio? No.
Well, it doesn't matter. Overvalued, overpriced, whatever metric we want to talk about. Every new growth company that goes through these phases is going to be identified as overpriced, overvalued, and too high of a price tag. There's no question about it. That's the nature of growth stocks. People who invest in growth stocks, they're not thinking about the current state of the economics or the financials. It is about the future, man.
And it is about I was waiting. Listen, if you have your bingo card at home and the future, listen, I am so tired of you message boys on things talking about Amazon. Listen, I've heard the Amazon argument on hundreds and hundreds and hundreds of companies. Anytime somebody wants to use a high ratio and it's about the future, man, they say, hey, look at Amazon, the juggernaut that would become Amazon, and they use Amazon to justify the ridiculous ratio today. How does Tesla get there, Tim? Don't give me it's the future and Elon Musk
capacity,
is cool.
supply lines.
Can I dive into this pillow fight? So a couple things. Number one, Tim, you're spot on with your analysis on Apple, Microsoft, all of them. At one point, they all had negative PE ratios. Amazon is the poster child for the negative PE justified growth movement, right? And I get as frustrated with Mark when I hear that argument, because for every Amazon, there's 100 other companies you've never heard of that didn't become the Amazon, right? I mean, think back to Tilray, when Tilray was a $20 billion company making $20 million in total revenue. And all of us were like, that's insane. How do you justify it, right? Well, you could have made the Amazon argument then too, right? Marijuana is going to take over the world, marijuana movement, federalization, all that jazz. And what did we see with Tilray? $300 down to $5. So I think the Amazon argument we see play out there in the market is misapportionately used. I just don't think it's an accurate example to use for a majority of the financial markets, right? Because again, Amazon starts out as an online book company, becomes this juggernaut of a company that doesn't show a profit for 17 years. 17 years, they didn't show a profit. Finally, they showed a profit in 2015. So I do agree with that, Tim, that, I do agree with Mark that you can't use Amazon as the poster child for every company that's overvalued. You just can't do that. It's a faulty argument. But at the same time, Tim, I would like to ask you a very pointed question. You're the one who brought up PE ratio, not Mark. So let's use the PE ratio. And you used it to further your argument. At what point did Amazon have a negative 1,800 PE ratio?
I don't know if they ever did, but I think that will be a positive number as soon as this earnings hit, right? Because it's 4 quarters, trailing 12 months.
4 consecutive quarters, including in the S&P. Let's see how that works. But at what point did Apple have a negative 1,800 PE ratio? At what point did Microsoft have a negative 1,800 PE ratio?
I don't think any of them were there.
Yeah. Negative 1,800 PE ratio. When we're talking about, when we were talking about Amazon's being overvalued, they had a positive 600 PE ratio. When we were talking about Netflix being overvalued, they had a positive 400 PE ratio. When we were talking in history about CMG being overvalued, they had a positive 600 PE ratio. A negative 1,800 PE ratio. Somebody find me the last company that had that nasty of a valuation for its current price.
And to build on what you're saying, Matt, go back and look. I looked at this the other day. When Amazon was worth 200 billion market cap, when Apple was worth 200, 250, 300 billion market cap, when Microsoft, when they were at the market cap levels that Tesla is today, and you look at where their business was, it was this established, moving forward without any question, just juggernaut of a business when it was hitting those market cap numbers. The problem Tesla people want today is they want the market cap numbers without anything in which we have seen historically as far as a healthy, stable, ingrained business had at those same market cap numbers.
I get that.
It's not even close.
You would make the same argument at 100 billion market cap, and they've made about 100 billion of that just in the last little parabolic run.
Well,
I'm not making an argument that Tesla.
I think we're missing what is going on with Tesla. Guys, the Tesla price movement is not about their vehicles. It has nothing to do with their vehicles. It has nothing to do with their batteries. It has nothing to do with anything either one of you just said, either bullish or bearish. The Tesla price movement and what Tesla represents in the United States markets, not the world markets, but United States markets, it represents the entire movement. Mark, you can talk all day long about the competition that is increasing for Tesla on their electric vehicles, and you would be 100% accurate, 100% accurate. But Tesla has taken on this broader theme in the financial world, as Tesla represents the entire movement, the entire ESG movement. Mm-hmm. It's not about Tesla. It has nothing to do with Tesla cars, has nothing to do with Tesla batteries, has nothing to do with the Cybertruck, has nothing to do with autonomous vehicles, has nothing to do with any of that. It's what this company, from a branding perspective, now represents to the entire financial world, is what it really represents. So to me, when you dive into Tesla's numbers and you're that analytical, data-driven analyst, you look at these numbers and you say, what in the hell is going on? Like what in the hell is going on? I know how Elon got to a profitable fourth quarter. He didn't cook the books. He tickled them a little bit. He rotated some money from the future into the current, and he did the same thing that many other companies do in non-GAAP nonsense earnings, right? So if we want to debate non-GAAP versus GAAP earnings, let's have that conversation, and let's have the SEC get away with do away with companies being able to report non-GAAP earnings. Every company should report GAAP earnings, because if you look at the GAAP earnings, Tesla doesn't make $2.18 a share. Tesla doesn't show a profit. They don't. Tesla's not included into the S&P 500. They're not. Tesla's down on the day big if that happens. If you look at that. So every argument Mark makes, I don't disagree with. If you buy Tesla as an investment at 1520 today, you better hope they're perfect on absolutely everything over the next 10 years.
Oh yeah, I mean, I think
You know,
that's the
and just
assumption right
just
there.
let me
But,
just build on what
again,
something Matt
what
said there.
I'm talking about is so much happens. Like there's so much love or hate on Tesla because of what Elon represents. He's a controversial figure, and whenever you have a controversial figure, you're going to have love, you're going to have hate, and there's no company that people will agree or disagree more with than on Tesla. But I truly do believe that people, when they analyze Tesla, that the biggest failure in that analyzing it is the fact that they're looking at Tesla, but they're not looking at what Tesla actually represents to the future movement of ESG. And
No,
so
the bear argument, and the only one I'll make against that is, does Tesla have a strong brand today? Yes. Do they have a brand moat today? Yes. And moats are very, very powerful. Brand moats are also the most fleeting of moats. So,
agreed. But Mark, Apple doesn't become the juggernaut of Apple without that brand awareness that Steve Jobs really created.
Yeah.
Yeah, like when Steve Jobs went out there with the iPhone, guys. Yeah, let's talk Apple for example. Everybody hated it. Everybody came out, was criticizing it. How in the world is this gonna play out? Nobody's gonna do it. Like literally, he was kicked out of Apple in the 90s because he was so controversial. And yet, because Apple had that strong brand awareness, Apple had that. Say something negative to my wife about an Apple product, she probably doesn't even know who Steve Jobs is. And she would be like, you just offended my child type situation. That's happening with Tesla here. Tesla has this brand awareness. It has this why about it that is not justifiable in the actual numbers. You look at the numbers and it's absolutely crazy train. It's like, how in the world can you justify a buying mentality with those types of numbers? But at the end of the day, we're talking about a company that started as an electric vehicle company that moved into batteries, now is moving into autonomous vehicles. Where are they at in 10 years from now? That's the question I ultimately have. And I'm not making a bull or bear case here, guys. I'm just trying to understand it more than absolutely anything, because Apple started out as a personal computer company. Mm-hmm. Microsoft started as a personal computer company, and now they're massively in the cloud business. Amazon starts as a company that is basically just an online bookstores, but now they're turning into a full service financial servicing company now that they're getting into insurance, automobile insurance in India. These types of companies, these big dog companies, we get too fixated on what their core business is right now, when at the end of the day, guys, what Microsoft is, what Amazon is, what Apple is, they are just massive venture capitalist company that is going to acquire so many other business avenues. I don't even know what Elon's going to be in 5 to 10 years from now. And that's what the Elon lovers, that's what the bulls on Tesla are believing in, is that this company can become one of those other juggernaut companies that we talk about, in the same vein of thought that we talk about Microsoft and Amazon and Apple and Google, where they're not, Google is not, even though consumers look at Google and they're like, oh, Google is just an internet search engine. No, they're not. They're in 50 other industries as well. All these massive companies, they are massive venture capitalist hedge funds where they're looking to acquire other companies. You talk about Pershing CEO, what's his name? I forget his name off the top of my head. He went bearish March 18th this year, got criticized for it.
Oh, Bill Ackman.
Yeah, Bill Ackman.
Yep.
Bill Ackman just went out there and started the biggest venture capitalist company ever at like $7 billion. And that's fantastic for Bill Ackman. But what do you think Tesla is? What do you think Apple is? What do you think? They're all doing the same thing. They're looking to acquire other companies to build their juggernaut of an empire. And that's that bullish case. It really has nothing to do with their electric vehicles. It has everything to do with what Singapore is doing. It has everything to do with what Hong Kong is doing. It has everything to do with what the world is moving towards in a clean tech, energy efficient, environmental friendly type technological movement.
No,
Yep.
and my counter to all that is, if all of that comes true, and that's how it plays out over the next 10, 15 years, today's price is justified. And those are some huge assumptions that Tesla will be successful in that journey. You're betting on Elon Musk. That's what you're doing at
Well,
these
any
price
buyer
levels.
that buys is betting on Elon Musk. I mean,
Listen,
let's call it like it
people that
is.
people that bet on Jeff Bezos and Steve Jobs and Bill Gates, and it worked out for them.
Mm-hmm.
And again, I completely agree with the overvalued nature of Tesla. It's crazy train out there.
Yeah,
I mean,
it is.
Train out there. But I'm just saying, I understand the future argument when it comes with Tesla. I do not understand at some point in the future the economy is going to be better argument. But I do understand when you're looking at a company talking about the future expectation, people are always willing to pay a higher price for future expectation. That's what the entire financial world is. Are you willing to pay it? The only thing I'll say about Tesla is Elon better be perfect.
Yeah.
I mean, and that's the thing, is you have to be perfect at these valuation levels. At $400, you don't have to be perfect. At $500, you don't even have to be perfect.
Well, but you wouldn't want to buy it at 400 either. You'd think it's still overvalued. So
I would market order buy it for
I got one more point on the whole thing with Tesla. This is a quarter, guys, where they had their factory production shut down in Fremont. They still saw strong demand for orders, and this new factory they're going to be putting into Texas is going to improve their supply lines. I mean, here's the thing. They're focused on building production. They're focused on the future. And Matt, you are 100% right. We don't know what Elon might get into, quite frankly. If you are a bull on Tesla, you have to put a lot of your faith in Tesla. And I did see one interesting question in the chat from
We
Tiago.
haven't even talked about what the value of SpaceX could represent for the future of Tesla.
Tiago has a great question here.
Hasn't even been brought up yet.
Right. And Tiago has a great question, Matt. And you're right with SpaceX, but also the Boring Company and the other things that they do. I mean, he has so many different ventures he's into.
If Elon's brother takes over, everybody's short Tesla because it's going away.
How much would I got to ask Mark?
Tesla better be perfect. I said Elon better be perfect.
Mark, how much would Tesla be worth if Elon decided to retire and move to an island somewhere and he was not the CEO of the company?
80% market cap down.
Yeah, at least. Listen, this is a story stock. At the end of the day, bears, bulls, I think we can all agree it's a story stock.
Yeah, I agree.
Story, Elon fans, pro Tesla people love the story. Bears, on one level or another, question the story, and they certainly question the story at the price. So,
see, Mark and I don't have it in us to fight, Matt. That was more of a little pillow.
It was not as vicious as I thought it would be.
I personally like being in the middle of you two. I don't have to deal with you.
I got no problem. I like it. I like it. We got a bunch of stocks we got to run through here, guys.
Market continues its breakdown.
Oh, and Tesla keeps selling here, and a couple.
Of course, I enjoyed Tesla selling off the entirety of the argument. So.
Matt, run us through what you've seen in earnings. We still have a bunch to unpack. Obviously, we're not going to go into as much detailed analysis as we did on Microsoft and on Tesla, but we still have a lot of stocks I want to talk about here. Start running us through them one at a time if you can.
CMJ very quickly, came in at 40 cents a share versus the expectation of 51. Dina, the burrito didn't help their revenues this quarter. They kind of missed a little bit there, but they did put in above revenue expectation of 1.4 billion versus the expectation of 1.2. Revenue did decline 4.8% year over year. Again, this one's the easy one to understand. Microsoft, I don't understand. Tesla's obviously a hot stock to debate. CMG's down, should be down, and should be down more. They missed on EPS numbers, and in a growth stock, high flyer stock, high valuation stock, 4.8% year over year decline in revenue is obviously very concerning. Nothing. The price movement I'm seeing today doesn't change the trend, doesn't change the pattern really. Let's see how CMG performs at 1100.
No, another example of a continuing theme. High flyers getting. I mean. These high flyers that have enjoyed this liquidity run in the markets, man, they're losing more than they're winning after earnings.
Mm-hmm. Mm-hmm. Down into the moving averages, though. I mean, there's not much there. Which one is next, Matty?
No, nothing much, but do keep an eye on that 20-day moving average. It's an old pivot point over here with resistance at 1100. Moving average is right there. Significant whole number. So keep an eye on CMG at 1100 there. Las Vegas Sands. Las Vegas Sands saw United Airlines yesterday, and they said, "Wait a second, Tackle Trading, hold the beer. Let me show you what a really bad report is." Las Vegas Sands came in with the expectation of losing money. Obviously, they were expected to lose 72 cents a share. They actually lost $1.05 a share, so a 30% miss on EPS numbers. That's not the storyline of Las Vegas Sands here today, though. The storyline is they were expected to come in at $2 billion. And Mark, they sniffed 100 billion on revenue, not on profit. They sniffed 100 million. They came in at 98 million on revenue. They don't have guidance. Obvious why Las Vegas Sands is selling. And quite frankly, it does get me a little excited for maybe a break of 42.75. You can see a little bit of breakdown play to the 40 handle. Talking obviously about shorting here on Las Vegas Sands. AT&T comes in. AT&T is finding out something. I wish they would have called me up a few years ago, because I was heavily criticizing AT&T's purchasing of traditional media, DirecTV and Time Warner, in a technological environment where, you know, consumer behaviors were moving to Netflix, Hulu, you know, Amazon Prime, now Disney Plus, but that was way before Disney Plus. While everybody's going into streaming, AT&T is like, no, wait a second, hold on. We're going to go into traditional media in 2020. That's AT&T, and they're paying for it a little bit, with over 300,000 subscribers not paying their highly expensive DirecTV bill right now. They did beat on EPS numbers of 83 cents per share. The expectation was 78 cents a share. Revenue came in at 41 billion versus the 43.1 billion expectation. So a miss on revenue, a beat on EPS numbers. Revenue was down 8.9% year over year. Very concerning, but it's AT&T, so there's nothing to see here. The people don't trade AT&T. They invest in AT&T to capture the dividend and write covered calls on. Next, we got two railroad companies here, guys. I want to get your take on it. We're going to play a little game. You got to pick one. UNP, United Pacific Railroad. They announced earnings per shares. And again, you got to pick one. United Pacific came in at $1.67 a share versus the expectation of $1.61. Revenue missed a little bit of 4.2 billion versus the expectation of 4.4 billion, and overall revenue numbers were down year over year at 24.2%. CSX, a Buffett stock, also a Tackle 25 stock here, 65 cents on EPS numbers versus the expectation of 67. So a slight miss on EPS numbers. Revenue came in at 2.3 billion versus the expectation of 2.5 billion. Overall revenues were down, very similar to United Pacific's, at 26.3% decrease in overall revenue. I don't think this is a space either one of you are looking at. Railroads?
No.
Am I correct?
There is no stock I hate in the market more than stocks that have recovered all of their gains for the year and still have minus 26% revenue year over year. Those stocks, they are literally, Mark, V-shaped recovery, everything's going to be awesome. That's ridiculous. For a stock not to be penalized at all, to be minus 25% revenue year over year, is assuming that everything's just fine, and it's fine really quick. Hate the railroads right now.
I don't have interest much, but I would pick CSX, Matt. I like the chart a little bit better. I do like their buyback program over the years. I like the company a little bit better. So if I was going to pick one, I'd pick CSX.
Yeah, I'd pick CSX. I think fundamentally it's a little better for covered calls, a little bit more liquid on covered calls. But I mean, what really could have stood out in the earnings of the railroad companies today was just they were so consistent with one another. I mean, they were really, really running with one another. It's almost like something happened to impact that industry a little bit. Like almost like something happened there. What I do want to get your guys' take on, though, is Twitter here. Twitter, up 5% earlier in the day, up 3% on their announcement today. Actually, it was up a little bit more than 7% earlier today, but a little bit of profit taking with the market here. Twitter came in, they were expecting not to see any profit at all, zero expectation on EPS. They actually lost 16 cents a share, guys. Revenue came in very similar to the expectation at 683 million in total revenue. 18.8% year over year decline in revenue. That's a pretty devastating number, in my opinion, for a growth type company like Twitter. But here's what really kind of pushed Twitter up on the overnight hours. And then I want to get you guys to take on it. They saw a 34% increase year over year in active daily users at Twitter to a number at 186 million active users at Twitter. What do you guys think? Oh, and they also saw a gradual increase in revenue throughout the second quarter, talking about recovery in their revenue section of marketing on Twitter.
I personally love what Twitter's doing. I really have. I mean, we talked about Tesla being a bet on Elon Musk. In some ways, I mean, Twitter is a bet on Jack Dorsey, and I do believe. I mean, I trust the guy. I like what he's doing. I like his leadership. I like his vision. The numbers, Matt. Obviously, we like seeing user counts go up and advertising dollars come back. Twitter's got some risks, obviously, just from a political perspective. I know that we've talked about that in the past. I don't know if that's going to rear its ugly head again, but I like the company. I'm interested. It's on one of my watch lists. There's no doubt about it. I don't think it's a buy here. I would buy it above that breakout. I would love a consolidation for about 2-3 weeks and then give me a breakout, something like that. But I like the company. I think it's target.
Mark, any interest Twitter?
I'm a bottom feeder Twitter. I treat Twitter a lot because I like the company at a certain price. I think their enterprise value is appealing. I like their space. They truly have a listen, Parler can try all they want. I'll believe it when I see it, when something actually competes against Twitter, right? So I think it has a dominant mode in the space. Those numbers were not good. And I think whether it's Facebook or Twitter or Snap or Google, the ad revenue story is a real one. I mean, I think we all are on the same page that we are heading not towards a V-shaped recovery, but you could see some really, really curtailed business spending. I just think there will be a much better point to get into Twitter in the future. So I'm not a fan right now at these levels.
Yep. Shocking. Mark hates a breakout. Breaking news.
I know, right? Seriously, like news at 11.
Breaking news. Two more very quickly, then I'll turn it back over to you, Tim. Southwest here on the backs of United Airlines yesterday. Southwest comes out, reports earnings of a negative $2.60 a share. That missed the expectation of a negative $2.53. They also came in a little bit above revenue, though, at $1 billion versus the expectation of $540 million, and a very similar decline that United Airlines saw as well. 83% decline in price, a little bit of a doji performance. Obviously, I think the market at this point with United Airlines and Southwest earnings, the market just was like, we knew it was going to be bad. We don't care that it's bad, but we don't want any love. There's no love here in the airlines. Do you guys think? I mean,
yeah, but I wouldn't invest in an airline, in any regard here at all. I'm on the Warren Buffett side of that one, and we're going to talk Buffett here in a second. But I got to tell you, I would not mind a little breakout there at 35, 36, whatever that little pivot price is. You're seeing a little bit of reversal characteristics. If you get a pop and you do get some rotation, Matt, I think you can trade some of these things that are reversing.
Yeah, you got to see it though. But if we see it, we'll put it on the scanner report. But right now, it's
not interested now. Yeah, more neutral.
Last one, copper company we talked about yesterday as we were analyzing copper futures. FCX here. FCX reports earnings. I want to say 3 cents a share positive. They were expecting to lose 3 cents a share. Revenue did top their estimates of 3.1 billion versus the expectation of 2.7 billion. Revenue was down year over year at 13.9%. Not surprising since most of the mining companies have shut down operations. A lukewarm report, in my opinion.
Yeah, the one thing, and I read every word of FCX because it's an actively traded thing. The one thing I really liked what FCX did, because this is a tough quarter for a lot of companies, right? They had very aggressive cost-cutting measures early on that helped them turn a surprise profit. And, I just love it when I love the story of copper, gold, all this. in this environment. I really love it when a management team impresses me, and FCX did that for me this quarter.
Well, I'll throw a third there. I would love it if we hold $13 on FCX and really give us a potential breakout of 13.90. I would love that breakout at 13.90, but that has to hold 13. I think if you close underneath 13, you're really kind of putting a wedge into that high base type analysis where you're waiting on those moving averages to catch up. You're really talking about a rounding bullish retracement at that point, which I do not like in any capacity from a short-term trading perspective. So I think for me specifically, FCX, you got to hold 13. If you hold 13, that breakout of 13.90 is still legit.
Well, then map that out in your head. I mean, hold 13 consolidation, post earnings now in an area that has the copper play, but the gold kicker mark, a little breakout there would be a beautiful high base breakout, Matt.
I love that. The copper play with the gold kicker.
With the gold kicker.
Well, that's
right.
that's what we call it.
Yeah,
at Tackle
beer with a
Trading.
whiskey kicker. That's
exactly
FCX
right.
now.
It's very appropriate for us to refer to it as that.
That's right.
I like it. But that's all on the earnings round.
Did you cover Whirlpool?
I didn't cover Whirlpool.
All right, just quickly, two other quick ones real quick. Whirlpool, they beat really suppressed expectations. WHR, really depressed expectations. They beat those expectations. Still, the standard was really, really set low, but they did smash expectations. There's no doubt about that. So they'll have that positive report moving forward. The company has some very favorable things to say about their business moving forward. And then Tractor Supply, one of those companies.
I knew one of the executive management team of Whirlpool at one point in my life, and he failed to impress me. And ever since that point, I've never traded Whirlpool again. That was like 10 years ago.
Leadership matters. Yeah.
Leadership matters.
Tractor Supply, TSCO.
I thought about getting Tractor Supply numbers, but I missed them.
A reasonable, once again, true, genuine growth. I mean, this has been a monster trend. A pullback on this company, good technical setup. It was a fabulous earnings report. It's a fabulous trend. And unlike, yes, it's getting caught in the crosshairs today, right? Market's selling off bigs. So it's getting caught in the crosshairs today. But this is one of those high flyers that surprised to the upside, and the market liked what they saw. So Tractor Supply, I think
what's going to just drive me nuts is everybody complaining on Twitter about how the market's crashing. And I'm going to have to be like, all right, calm down a second, guys.
Well, that's why I love
the market is not. No, this is.
You know it's going to happen out there in the world. Market's crashing. Oh my God, Apple's down 2.5%. What? The end of the world is happening.
No, unless something changes. Unless something changes, like something with China or stimulus or something like this, this is a pullback that not today's necessarily. You never know. Is it a 1 day? Is it a 2 days? A 3 day? You never know the answer to that. At some point, the pullback's bought up. The pullback is bought up at some point. How deep is it before that occurs?
Two more stories I think we got to hit before we wrap.
Down days in the market are not a bad thing.
No, of course not. Normal market behavior, up and down and back and forth. And by the way, this earnings season feels more like normal earnings behavior and price behavior than it did the time before. And I actually like that. I'm looking forward to more of that as we break these stocks down one at a time.
Last earnings season was impossible.
It was impossible. Well,
so tough to analyze and work in that environment.
Yeah.
But this one, it's getting back to normal, guys.
Feels more normal.
That's a positive sign, to be honest.
I agree. Two quick stories, Matt, as we kind of start pushing towards the end of our show.
I got one more stock. I just found it. I think it's important. And the only reason I found it is because I look at this space. I don't look at this company very much. Pulte Group, home builder. On the backs of the June report that came out in July on home building yesterday, existing home sales showing a record increase in existing home sales. Up, I believe it was close to 20% month over month. Pulte Group said, you know what, guys, let me put a little cherry on top of that good report you guys had yesterday. They came in at $1.15 EPS numbers, 84 cents on their expectation. They also came in above revenue estimates at 2.6 billion versus the expectation of 2.4. Revenue in this sector did increase 4.2% year over year, guys. And they said, based on their performance in the second quarter, we are cautiously hopeful, i.e. bullish, for the third and the fourth quarter of 2020 in the residential housing sector as well. Pulte talking bull, talking positive. Home builders in general, they're starting to set up a little bit.
Yeah, I do like the residential construction. We've talked about them a couple times this week. I do think you can target them, and that it would be a nice little breakout there on Toll Brothers. DHI has been a great performer. But there's two more stories I do want to get to. And by the way, if you're out there watching our show right now, welcome out to our halftime report. As always, we do this each and every day. The markets are live. If you've not done it yet, click subscribe, click the bell, come back and join us on a daily basis. We'll get final thoughts here in a minute. Bank of America, Matt, this is one of the first times we've seen Warren Buffett step in and purchase a bunch of shares. Berkshire Hathaway added 34 million shares of a stock that they already had a high percentage of ownership. I think before they added all these shares, they were already at like 7% ownership in the company. This pushes them up to about 11% ownership in the company. Does this mark Buffett making a move here, or is this just a conservative play? I mean,
honestly, I've thought about that question, Tim, because Buffett's been criticized in certain quarters of the financial world for not doing enough. Like Buffett is supposed to have an altruistic view of the financial world, and he's supposed to, I don't understand why Buffett is responsible for supporting asset prices. I don't understand that criticism Buffett gets. I really don't. I think it's foolish. It's almost like everybody wants handouts these days. I'll stop there. But the reality is he was criticized, not by us. Buffett was never criticized by us for waiting on, being patient. And so, he was heavily criticized because his response when the crisis hit in 2008 was fast. I mean, once Lehman Brothers went belly up, I mean, they were begging Buffett with increasing dividend payouts to come in with his billions. And Buffett did. He came in, he bought up Bank of America, bought up Goldman, bought up a little bit of some other bank stocks out there as well. He wasn't as fast to act here, and so he was criticized a little bit. Once again, I've always felt the criticism of Buffett is beyond dumb, like beyond dumb. Like, do not listen to people that criticize the Oracle type dumb. So was this more of a value play Buffett saw in Bank of America, or does this represent something bigger Buffett might be seeing in the value aspect of the world? And I don't think we know yet. I really don't think we know yet. But it is significant that he is coming into the financial space specifically here. And I know, Mark, this is a space you're looking at potential bottom feeding. I know you're getting a little pro bank, and I've seen that just in terms of your language, just how you approach these. I mean, you're a wonderful poker player with not a wonderful poker face when it comes to.
Oh, no. There's a reason I played online poker. I have a terrible. You can read me like a book. I wear my emotions on my sleeve.
Yeah.
In fact, there was a guy once that said, "I know you have a good hand. Your eyes just dilated." And so, yeah, no. So.
Oh no, I think we get you wear your emotions with you and Tim's little discussion earlier today. So. It's not shocking for me and Tim to be like, yeah, Mark's interested in this space, even though you haven't really talked about it a lot. But now that Buffett's getting into Bank of America, does this represent something? First of all, guys, I want to get both you and Tim's take on this. Does Buffett coming into Bank of America represent something bigger to the market in the value type play? We are seeing rotation from growth to value here. Or is it just Buffett seeing a specific opportunity in a company he already had a massive position in?
All right, here's my theory. You guys tell me what you think. This is my working thesis I'm working on banks, all right? One, we see this general rotation. Buffett's getting on board. Those are things kind of confirmation signals for me. Here's my take. The reason banks are down so much is because there is this real worry about credit risk, right? That they have the huge loan reserves, an unsure economy. Almost everybody assumes that there's going to be a lot of bankruptcies. And so forth. All right. So that's what's holding banks back, is that fear of these massive defaults and they're going to occur. They're going to occur. All right. So if that plays out and it's worse than expected, well, that creates a volatile environment. That creates a scenario for the Fed to come in. That creates a scenario for that volatility, extra stimulus, etc. And we saw what banks did in that environment this last quarter. They killed it. Many banks had record revenues. This Wells Fargo, sorry, you're not included in the party. You have more problems than I know what to do with. So screw Wells Fargo. I want zero interest in them. But the banks as a whole, they've shown in this volatile environment with stimulus and so forth that they can make money and they can generate a ton of revenue. Now, if you have that really bad scenario play out, they should be able to offset, not a nightmare scenario, right? If you think the whole economy is going to crash under the weight, banks aren't for you. Well, really nothing's for you. Go short if that's your viewpoint. And so I see banks being able to, at the worst, maybe go down a little bit, maybe tread water, but if it's good, if it's not as bad as expected, I think there's some stability in banks. They're not a great growth play because you're still going to be in a zero interest environment. But I like banks from a cash flow perspective right now, because I think they win in either scenario. Either they win because they don't have all these defaults, the economy gets better, or they win because their trading revenues and their loan and the deals they have with the Fed. And the ultimate out is, even if you're wrong and you have price depreciation in the short term and there's some real thing, well, they're going to get bailed out. They're first in the line with the Fed, and that they won't go under. You won't have a Lehman at all. So that's my general thoughts on banks right now. Kind of like them from a cash flow play, especially at discounted levels.
And I got no problem with that, but the Buffett specific part of this news, I think, means nothing, quite frankly. He has 140 billion in cash at Berkshire Hathaway. Matt, he spent 800 million to add to a position on a company that he already knows and trusts and feels confident in. It's not like he splashed around 20, 30 billion dollars and threw it at the banks.
I did that, and I thought the same thing, T. But again, in the face of the criticism, and it's been hot and heavy in certain aspects of the financial, communities. For him to come in at this point, even if it's just a dipping of the water, he did increase his position size 4%. You can say he's got 140 billion, but he did increase it 4% specifically in Bank of America.
It's not a bad thing for Bank of America. There's no doubt about it. But is it a bigger thing for the broad market that Buffett's getting involved? I think that's too early to say that.
Okay, you're right. In trading, there's not a lot of concrete, hard evidence of things, correct?
Mm-hmm. Mm-hmm.
Correct. Most of everything is circumstantial evidence that you build into a philosophy, correct?
Correct.
Mm-hmm.
Okay. So here's just a little bit of circumstantial evidence here that leads to probability analysis. Coming into the earnings season, we've already talked about the three things that I needed, so we don't need to go on that again. But here's some circumstantial evidence. High flyers. Okay, high flyers. They've been selling on positive reports. High flyers have.
Mm-hmm.
Okay. Two examples. You don't need to go further than today. Tesla and Microsoft. Both of their reports were really good reports. You can dive into the details and criticize Tesla's accounting numbers. Absolutely, I wouldn't disagree with you. But their numbers were positive numbers. At the end of the day, they posted a really good report. Same thing with Microsoft. Both sold off. Distressed areas of the market, okay, that have reported earnings so far. The response to really, really negative reports out of United Airlines, hardly nothing. Out of Southwest,
United Airlines up 4% on a day where the market's getting killed.
Out of Las Vegas Sands, a devastating report, only down as much as Apple is today. More market response than absolutely anything else. So the distressed areas of the market, despite reporting disastrous numbers, oh my goodness, they're kind of basing, not doing enough, not doing a lot, not going up, not going down, holding support levels. Third circumstantial evidence, Buffett coming in.
Mm-hmm.
Doesn't that mean something from a macro level to support the rotation argument I've been making now for over a week and a half.
I think it's spot on. I'm totally on board. I think there isn't a genuine attempt. Now, if the whole market collapses, everything collapses, right? But I think there is a real attempt to rotate out.
Mm-hmm.
And if you see vaccine news, or if you see death rates go down, or if you see cases go down, or if you, most importantly, if you see the economy reopen up in any level, boom, that you want to be on board that trade that week.
Yeah.
And then you couple it with the selling you're seeing in the aggressive areas of the market, the Russell 2000, the Dow Jones, threatening breakouts. And again, I'm not trying to say Nasdaq tank, because I will tell you there's going to be really good buying opportunities in tech in the short future. In the short term, I just think you're starting to set up technically, and you're starting to see evidence, you're starting to see the circumstantial evidence build to the point where, it's like, yeah, rotation is starting to happen, at least in the short term.
Yeah. And the Buffett news is definitely good for distressed areas. And I think it does further the conversation, the argument around this rotation stuff. So I don't criticize that at all.
Yeah, and again, if the market goes bearish, everything sells.
Yeah.
Everything. Distress, tech, whatever thesis that has been going on in the last 3 months, everything sells. But as long as the market stays bullish, you're going to see these short-term rotation themes play out.
Well, even if the market doesn't necessarily stay bullish, but stays neutral, you could see those play out.
Could you imagine what Warren Buffett would actually say about the stock market if he just shared his thoughts right now?
What's happened in the last 3 months is batshit crazy.
Yeah.
Oh, he would have been on your pro Tesla argument.
Sure. All right, last one here. Amazon, Matt. In the future, when the Great War is fought, in what year was it, Mark? Like 2300?
2332, the Great War of Amazon and Disney.
Amazon and Disney will bash it out. And part of that, Matt, we see these stories in the news every now and then. Amazon's getting into car insurance or something like this. What is going on here?
Well, I'm just telling you, in the future, guys, we're going to have 5 companies. They're full service companies that we get everything from, right? And Amazon's one of those companies. So, the argument on Tesla that you guys were having, and my point is Tesla has the ability to be one of those companies.
Now, Tesla's going to be bought out by a scrap company at some point in the future, and they'll supply parts to.
Company is going to have to be Amazon.
Amazon's going to own the whole world one day. It's going to be the United States of Amazon.
Right.
Yeah, Tim. I mean, Amazon, a little bit of just hesitation coming into a very important earnings season for Amazon. Amazon's selling with the market today. The concern is the double top we saw in Amazon that we also saw in technology. But the news on Amazon is just, okay, this is what Amazon does. I really didn't take anything from it because I don't think anybody's shocked that Amazon has their greedy little fingers in every industry in the world today. Mm-hmm. And that's just what happened today is just further evidence of that. Amazon is partnering with a couple Indian companies to provide, I believe, insurance to Indian consumers is what I read in terms of the news. Again, I didn't take really anything from it, just other than that's another news day on Amazon.
At what point do we stop calling Amazon anything but a conglomerate?
That's all they are.
Yeah, well, because they're not a tech company. They're Amazon. They're a big, huge conglomerate that's going to be in all kinds of spaces.
Same with Microsoft, though, right?
You should revise your Tesla argument based on what you just said about Amazon, because Tesla it's a different industry, but they're going down that same route that the Apple, the Googles, all of these companies. You know what they're trying to become, guys? They're trying to become holding companies.
Yeah,
like Berkshire.
Yeah.
Well, then you could apply that same logic with Tesla to Spotify.
To a smaller extent, obviously in a different aspect of the evolution of the company, but that's where corporate America is going. Corporate America isn't going into let's spend billions upon billions in research and development. Corporate America, at the top of corporate America, is going, let the micro companies spend the billions in research and development. Let me acquire them. And I'm not saying anything new, guys. That's been going on for 15 years now.
Yeah, that trend's not stopping anytime soon.
Yeah, it just seems to be, furthering and, seeing a little bit more momentum in the last few years.
Mm-hmm. Guys, I think we got to wrap this one up here today. I think we hit all the major news headlines, the earnings. Really enjoyed the conversation. Let's get into final thoughts here. And one thing, Matt, we've got a lot of new watchers out there, people who have joined our channel for the very first time. I do want to explain Tackle Trading's Pro membership at some point here.
For all those who are finding Tackle Trading, whether it's through YouTube algorithms or you're watching another show and that ended and you found us, or however you did, just welcome it to the new members. And for Team Tackle out there, you pro members, let's welcome all the new people that are viewing Tackle Trading right now. We're a community of like-minded traders and investors navigating the market together. We analyze the markets on a daily basis. We put out reports for our pro members every week. We do a lot of educational stuff, teaching new traders the art of technical analysis, options trading, futures trading, and so on and so forth. And so just a big welcome to all the amazing new people that are finding us for the first time. And I hope you guys come back and again. And if you enjoy the market commentary and yes, even have to put up with some of the nonsense between three brothers who I think love one another, Mark.
We do love each other very much. Our family is amazing.
We would be the first to punch you, everybody. Yeah, we would be the first to punch each other in the face. But if you threaten one of us, we're also the first.
Oh, no. Listen, a few times in life, somebody has said a bad word about someone else in public. It doesn't get pretty. I'll call Matt a jerk, and then 5 seconds late. But if you call him a jerk, you and I are going to have words.
Different beast.
That's right.
That's right. A different beast. But so welcome you guys out to Tackle Trading. I'm glad you guys found us, and I hope you guys come back again.
Yeah, absolutely. Guys, lots to unpack, obviously, day over day over day. Tomorrow, we're going to have Breakout Frank on the show. He joins us each and every Friday. Always fun. Noah, I believe, is teaching the Cash Flow Club tonight, 8:30 p.m. Eastern. If you're
Noah gets back from vacation, we're like, just throw him to the fire.
You got to get
That's the only way to get back into it, Noah. That is the only way to get back into it. Just get into the fire.
Oh, well, cool. I was just on the phone with Gino, so he was just saying hi. But what fire am I getting thrown into again? This market fire? It's selling.
Are you teaching tonight? Cash Flow Club?
I'm teaching Cash Flow Club tonight. You bet.
Very
It's
cool.
a really good thing to know how to do during a market sell-off. How to sell covered calls and how to call your stock positions. You got to know how to do that stuff during a sell-off.
Yeah, for sure.
Especially during earnings season.
Oh, no doubt.
Absolutely.
And if you got any questions, pro members, if you got questions, I believe no one's on the lounge, Traders Lounge tomorrow morning at 11 a.m. Eastern.
Can we note the cat on your shoulder?
No, I need a picture of that.
I need a screen grab.
That is amazing.
That's love like that. A lord or like.
You have this rough exterior that you try to portray to the world, and then you have this cute little cat, just jumping on your head and like petting your Logitech. We should have bought Logitech stock. He's wearing an H800.
The cat knew. The cat knew.
That's really cute. I mean, is it trying to lick your ear?
No, it's doing it. What cats do. It does its rubbing thing, and now it's like, listen, you're talking about me. I don't like that. I'm gonna go away. But listen, no, I love cat. Listen, say we're like my fantasy football teams, which I don't think I'm gonna play. I'm so sour on the NFL right now. Anyways,
I got $10, Seth, and I'll give you 2-to-1 odds till he plays.
Listen, hey, a couple things, and then we'll get to our final thoughts on the market. But I don't know if you saw this headline. It's 2020, so anything can happen, right? Mike Tyson is returning to the ring for the first time in 13 years.
I am putting money on him to win. I don't care who he's fighting, and I mean,
you're going to watch, right? Like, man, kids might.
Wait, Mark, did you not see the video he published on social media about
I have not.
Oh my God, he looks like he can destroy people today. There's no doubt.
Listen,
he is in shape. He is ready. That is not a man that you want to mess with.
No, Mike Tyson's an icon. I mean, if you remember back in the day, right? That's an old person, listen, back in the day, right? Man, when Mike Tyson, when he was his height, man, people talked about Mike Tyson as much as they did the NFL, about NBA. Oh, yeah. Like Mike Tyson. I
still remember his first fight when he got out of prison.
Yeah. And I like Mike Tyson. Listen, Mike Tyson.
It's fantastic. Tyson knocked it like Peter McNeely was running around there.
That was hilarious. I'll never forget that fight. I'll pay-per-view that one. If Mike Tyson comes back, pay-per-view, I'm in. Absolutely.
It's 30 years, and I'm still shocked he got beat by Douglas.
Yeah. It was like the odds on that one, right?
I remember the Peter McNeely.
Linda, we're kicking you out of fantasy football this year. You beat us all. You're too good.
Too good. Screw
You're
you.
too good.
I lost $20 on the Peter McNeely fight, by the way. I don't know if you guys remember our old
Peter McNeely?
No, this is what happened. Mom used to hire a guy named Harry that used to come around the house and work on odd jobs and projects. I don't know if you remember Harry at all when we were kids, Mark. 1990s,
I remember Harry
for
sure.
Dad. And Harry, the fight actually came on HBO, but the fight was actually delayed on HBO by about 20 minutes. And the fight only lasted like 1 or 2 minutes, right? Didn't McNeely get punched out in the first round? And Harry came home, and I'm like 14 years old. He's like, I'll bet you $20 this fight only lasts 90 seconds. And I'm like, well, I mean, I think it'll go 2 rounds.
You know,
I'll take
all this shows is you've been terrible at bets for your entire life. That's what
he cheated. He took $20 from me. He knew information.
I win money off you cheating all the time. You still haven't wised up to the game.
There's an admission right there. Everybody who listens to our podcast knows how I lose now. Guys, that's our show. We are out for today. We will be back tomorrow and have some fun. We'll see you guys.
Deep dive on callers on callers and protected put options. Love it for Coach Noah tonight. And Breakout Frank tomorrow, guys. A lot of technical analysis is typically talked about with old Breakout Frank. So get excited for old Breakout Frank to be here tomorrow.
And one last thought just out there for the final thought from me. Listen, hopefully you weren't too overextended into this little pullback sell-off we're having. You never know when one's going to end. Eventually, the market still has trillions of dollars of liquidity, right? You just don't know when the technical setup will occur. A nice technical setup. Let's hope one occurs. Let's hope it just doesn't all erase tomorrow. But I mean, there's a lot of things out there. Just don't overextend yourself. And then on a down day, it's just part of the cost of doing business.
I love it. All right. Noah, have some fun tonight. Everybody else out there, we'll see you guys tomorrow on the halftime report.
Later, team.